Hi, hello everybody. So hope you're doing great. എന്തൊക്കെയാണ് മക്കളെ സുഖല്ലേ? Ready? So I know your exams are too close. Ready? Now this time we comes up the another demanded session, CMA Final CFR Marathon past year question solutions. Ready? So here in this sessions we cover June 23 solutions, December 23 and June 24 and December 24, but this will be a part by part videos. In first part we will discuss June 23. So now before coming into the discussions, some points you have to keep in mind while we discussing this question answer. Ready? First of all, I'm prepared a detailed answer key PDF. Ready? So in this PDF I gave complete details of answers. Unlike ICMA, in ICMA answer key they just only give some keys. Ready? But here we give complete answers. Ready? So to get this PDF, first of all you have to message a hi on this number through WhatsApp. Ready? So the number also I'm giving in the description. Clear? And if you are not yet joined on the group, first join. Ready? Now the second point, all the answers have a detailed workings unlike ICMA. This already I said. Now this third point, no MCQ discussion because this is already we done as a separate video MCQ marathon. If you are not yet watched, watch it first. Clear? So now the fourth point, if previous question is the same question which we done from the classrooms, then we never do again a detailed discussion. Rather I'll just go through the answers and you can refer my detailed answers. Ready? Okay, that's it. And now here we only take minimum time. That means we are not take too much time for getting the quality. We take minimum time to deliver the maximum quality. So for that I prepared all the answers previously. That means in the on screen I'm not doing the sum. Rather I'll show you the answers which I previously prepared. Clear? That's it. And that's it. Now all the complicated question, I know that if this question have some doubts probably, so in that area I will make a detailed discussion. Clear? So all complicated questions will be discussed in detail. And the last point, don't expect a topic discussion related to that question. Just imagine if I'm doing a goodwill valuation question, I'll never do goodwill chapter discussion. Ready? So if you want to see, please watch the class first. Ready? Okay, thodangale makle. Now so in first part I'm going into June 23. ഈ ജൂൺ 23 ക്വസ്റ്റ്യൻസുമായിട്ട് ബന്ധപ്പെട്ട് ഐസിഎംഎയുടെ ആൻസേഴ്സ് കീയുമായിട്ട് ബന്ധപ്പെട്ടുള്ള ചില ഡിസ്ക്ലൈമേഴ്സ് ആണ് ഞാൻ സ്ക്രീനിൽ ആദ്യമേ കാണുന്നത്. റെഡി? ആദ്യം തന്നെ പറയാം, ജൂൺ 23 ക്വസ്റ്റ്യൻസ് ആൻസേഴ്സിൽ some answers have an AS touch. Actually syllabus 22 does not cover any AS, but in some answer key of June 23 they give some AS reference. I don't know why. Maybe they this was the first attempt of new syllabus. So from syllabus 16 to syllabus 22 this was the first attempt. Until December 22 it was based on old syllabus. In old syllabus AS was the main area. Ready? So when they make a shift to in this, maybe some answers they gave wrongly based on the AS low point. Ready? So but don't worry, in coming exam, that means after this June 23 there is no such issue. So don't worry, in your coming exam such kind of issues will never be there. Ready? Don't worry. Now then, especially in June 23 related answers, some answers have a different answers with ICMA answer key. That means ICMA answer key is not perfect, maybe because of they putting some alternative assumption, or sometimes I feel there is an error. Ready? So since they don't give a detailed solution, what you have to do, you just go through the answer I'm printing in this PDF. Clear? That's it. So this is the only solution we can do. Clear? Now don't worry, this uncertainty is only in this June 23 questions. Ready? Okay, that's it. Now moving on. First, I'm going into June 23. Section A MCQ part I'm not discussing. Slightly moving into section B. So the first question. So I'll show you the question papers here. Ready? So this is actually we printed in our material. Ready? So you take June 23. Clear? So the first question, first section B question 2A. Ready? So yeah, this question has a AS based solution. This is what I discussed in disclaimer. Ready? Let's read it. Being a faculty, I'll do my maximum. Don't worry. Ready? Ginger Tulsi Limited acquired a patent at a cost of 80 lakh. So this is an intangible asset on 1st April 2019. So that is a purchase date 1/4/19. The company started amortizing the asset at 5 lakh since എന്ന് പറഞ്ഞാൽ മുതൽ എന്നാണ്, അതായത് ഫ്രം 31st March 21, അതായത് 1/4/19 കഴിഞ്ഞിട്ട് 31st March 20 ഫസ്റ്റ് ഇയർ. പക്ഷേ ആ ഇയറിൽ നോ അമോർട്ടൈസേഷൻ. ബട്ട് നെക്സ്റ്റ് ഇയറിൽ 31st March 21 അവിടുത്തെ അക്കൗണ്ടന്റ് 5 ലക്ഷം അമോർട്ടൈസേഷൻ ചാർജ് ചെയ്തു. Ready? Now. Okay, that's it. So now since next year 31st March 22, since 31st March 22, the company started amortizing the asset as per Ind AS 38. That's it. അതായത് after 22 they started amortizing as per Ind AS ready after 31st March 22. So now remember, on 31st March 23 it was found that the product life cycle may continue for another 5 years from then. അതായത് 31st March 23 നമ്മുടെ റിമൈനിങ് യൂസ്ഫുൾ ലൈഫ് 5 years ആണ്. ആൻഡ് ആ റിമൈനിങ് യൂസ്ഫുൾ ലൈഫിലെ നെറ്റ് ക്യാഷ് ഫ്ലോസ് അമോർട്ടൈസേഷൻ ചാർജ് ചെയ്യാൻ നമ്മുടെ ഒന്നെങ്കിൽ നമ്പർ ഓഫ് യൂണിറ്റ്സ് അല്ലെങ്കിൽ ക്യാഷ് ഫ്ലോയുടെ പ്രൊപ്പോർഷനേറ്റ് ആയിട്ടാണ് ആ ക്യാഷ് ഫ്ലോ ഡീറ്റെയിൽസ് ആണ് തരുന്നത്. അതായത് 31st March 23 മുതലുള്ള 5 വർഷത്തെ ഡീറ്റെയിൽസ്. റെഡി? ഓക്കെ. Now 31st March 23 കഴിഞ്ഞ് 31st March 24 കഴിഞ്ഞ് now 31st March 25 it is felt that no further benefit will accrue in future. അതായത് 2025 ആയപ്പോ ഇനിയുണ്ടല്ലോ കുറച്ച് ലൈഫ്. പക്ഷേ on 31st March 25 they felt that no further benefit. That means the value is 0. Hence 31st March 25 എത്രയാണോ ബാലൻസ് അത് കംപ്ലീറ്റ്ലി അമോർട്ടൈസ് ചെയ്യണം. Ready? So now question is pass journal entry to record the amortization cost as per Ind AS 38 for 21-22 from 21-22 to 24-25. Clear? This was a 5-mark question. So before answering this question, remember, ready? I'll tell you the amortization rule as per AS and as per Ind AS. Ready? So remember, as per Ind AS 38, we know that an intangible has to be amortized based on useful life proportionate to proportionate to output. Clear? That's it. And remember, if useful life is indefinite useful life, no amortization. So this is a rule we learn in this. Ready? Maybe you see in this slide when I presented my discussion. Ready? Useful life of indefinite anengil no amortization, definite anengil useful life in proportion to output. But when we coming into AS, if life is indefinite, that means നമുക്ക് ഈ അസറ്റ് എത്ര കാലത്തേക്ക് ലൈഫ് കിട്ടും എന്ന് കൃത്യമായിട്ട് പറയാൻ പറ്റുന്നില്ലെങ്കിൽ, we take 10 year as a useful life. This was a law we discussed in AS. So this law point I clearly written as a basic clarity. Ready? As per in this, if life of an intangible asset is indefinite, no amortization. But in AS 26, if life is indefinite, amortization will be charged for a period not exceeding not more than 10 years. That means 10 years should be taken as a basic assumption, rebuttable presumption. So this was a law. Ready? Now coming into this question. So they actually purchase the asset on 1/4/90. Ready? So but on that date they don't mention the useful life. That means useful life is indefinite. Ready? Okay, the useful life is giving only on 31st March 23. So I'll write the timeline. Ready? 31st March 21, 31st March 22. Ready? 31st March 23, 31st March 24 and 31st March 25. Just a minute. Okay, so this is the timeline. Since this question is actually gives a lot of confusion in students actually asking too many doubts in WhatsApp related to this question. അതുകൊണ്ടാണ് ഞാൻ ഇത്ര ഡീറ്റെയിൽ ആയിട്ട് ഡിസ്കസ് ചെയ്യുന്നത്. So now we know the life only on this date. Ready? Until that there's no clarity. And now coming into question. On 31st March 21, they actually charged this year end they charged 5 lakh, right? That's it. Now then since 31st March 22 onwards, company started amortizing in this 38. That means 2022 വരെ AS based ആയിട്ടാണ് ആക്ച്വലി ആ കമ്പനി എന്ത് ചെയ്യുന്ന amortization ചെയ്യുന്നത് എന്നുള്ളതാണ് ബേസിക്കലി ഇവിടെ നമ്മൾ മനസ്സിലാക്കേണ്ടത്. സോ യു ഹാവ് ടു അണ്ടർസ്റ്റാൻഡ് until 31st March 22 the company was on AS based. Ready? So now from 31st March 23 they charged amortization as per in this. So as per in this, if life is giving so 5 years proportionate to outputs or cash flows. Ready? So now actually their accountant is making mistakes. So our mistakes നമ്മൾ correct ചെയ്യണം. Ready? എന്താണ് first mistake? In this no amortization charged. But ഈ വർഷം 5 lakh they charged. ഈ വർഷം അവരെന്ത് ചെയ്തിട്ടില്ല, ചാർജ് ചെയ്തിട്ടില്ല. റെഡി? അപ്പോൾ ആക്ച്വലി AS നിയമപ്രകാരം ആസ് പെർ AS how much should be the depreciation charged? How much should be the depreciation charged? 80 lakh divided by 10 year is the life we take if the asset has an indefinite life. Ready? Now for 3 years actually this should be the amortization. That means we will have 24 lakh. But already in 31st March 21 they charged 5 lakhs. So now to correct the mistakes on 31st March 22 we have to charge a amortization of 90 lakh. So in this 90 lakh, this current year depreciation as per AS is 8 lakh. Ready? And out of 90, that is the pending amortization. അതിൽ 8 lakh current year ഉള്ളതാണ്. ബാക്കി 11 ലക്ഷം പ്രയർ പീരിയഡ് റിലേറ്റഡ് ആണ്. റെഡി? നൗ ഞാൻ എൻ്റെ ആൻസർ കീയിലോട്ട് വരാം. അതായത് 21-22 ക്ലോസിംഗ് ഡേറ്റിൽ 31st March 22 ഹൗ മച്ച് ഷുഡ് ബി ദ amortization? Ready? So total as per AS for 3 years they have to charge 80 lakh divided by 10 into 3. But already they charged 5 lakh. Now we have to charge 90 lakh. So the entry will be. So on 31st March 21, they charged 5 lakh. On 31st March 22, since on that date they are changing from since 31st March 22, they are changing into in the years. So they're shifting into in the years. That means 31st March 22 they charge the amortization should be charged as per AS. So as per AS total 24 lakh should be charged. Out of that 5 lakh already charged, so we have to charge 90 lakh. Out of that this current year, that means 21-22 8 lakh. That means 8 lakh means actually as per AS if 10 years the life 8 lakh. So now 11 lakh is the correction related to prior period. Ready? Okay, that's it. That's it. Now from next year onwards we are doing as per this proportionate of life. Ready? Now we have 5 years. So at that time the remaining carrying amount is actually 56 lakh. On 31st March 23 the remaining carrying amount is 56 lakh. Ready? Now when you total it, this has a 200 to 200. Ready? So based on 2 digits 200 into 36, that is amortization for this year and for next year based on, you can check the calculations, 200 into 46, that will be the proportionate amount. Clear? That's it. So in coming years 23 and 24 this is the amount. Now on 31st March 25 they fell no further benefit. That means asset has a zero value, so you have to amortize a complete remaining amount. So the remaining amount will be this. Ready? That means out of 80 lakh minus previously charged amortization, when you deduct this you will get this. Ready? Okay, 33 lakh. So that's it. So now this question actually has some uncertainty related to AS. So a student should know the AS also, but that is not fair because in new syllabus they only discussing in the AS. Ready? So maybe I'm sure that in coming exam they will never test a question like this, but being a faculty I should make you clear with this point. Ready? So I think everybody is happy now. Clear? That's it. Okay, now we have to move on to the next question. That's also a beautiful question. Okay, so there's a really it's a great question because this is testing in this 16 knowledge and in this 23 knowledge. Okay, that's it. Okay, let's read the question first, and I'm prepared the complete machinery account here. Ready? Okay. So now, okay. So P Limited provides the following information on 1/4. They borrowed 5 lakh at the rate 12% to construct 10 machines. So we are constructing 10 machines. For that they take a loan of 5 lakh at 12%. Ready? So since they constructing machine, this may be the qualifying asset. Let's see how long it take. Ready? Based on that we can decide whether it is qualifying or non-qualifying asset. So they incurred 8 lakh on material, 2 lakh on labor, 50 on freight, 20. This is all direct cost. We can capitalize it. So the estimated total physical life is 10 years, but we don't require physical, we require economic life, which is 4 years. On 1/10/2016 means after 1.5 years, machine become ready for trial run, and they make a trial run. Out of that, there's an expense and this is a collection. So net trial run has a 15,000. Actually, this question is to prepare plant and machinery account. Actually, this machinery account preparation is actually a basic ledger account preparation. Ready? But this machinery account is to be prepared with the knowledge of Ind AS 16 and 23. Clear? That's it. So there are a lot of points they are testing in the same question. Clear? And on 1/1/17 machine become ready for commercial. So in short, on this date the asset become ready to use. Asset become ready to use. That means from this date only depreciation start to charge, and from 1/4/2015 to 1st January 2017, it take more than 1 year. So it's since it's a qualifying asset, so interest should be capitalized only from construction date and loan date to the asset become ready to use. So the interest can be capitalized till 1st January 17. Ready? Now on that date the residual value is 2 lakh. Ready? So government grant is received for this. So if a grant is related to fixed asset is received, actually this should be reduced from asset cost. Clear? Now on 1/4/17 company does not begin using the machine until 1st April 70, and from that date they put to use. Ready? Actually this put to use we don't need to mind. We will start charge depreciation from ready to use date. Clear? On 1/10/2017 they sold one machine out of 10 they sold one machine. Clear? For this. Ready? So on 31st March 2019 the remaining useful life is reassessed. So there is a revision is happening, and the residual value, the new residual value is this, and the property is revalued upward by 45,000. Clear? So there is a revaluation. So from that date the depreciation will be on that new figures. On 31st March 20, company decide to adopt WDV method. They changing into WDV. On 31st March 21, machine become idle and retired. Ready? And then on 31st March 22, the asset held for disposal. ഒരു അസറ്റ് വെക്കാണെന്നുണ്ടെങ്കിൽ സ്വാഭാവികമായിട്ടും ആസ് പെർ ദ ലോ ഇറ്റ് ഷുഡ് ബി ഷോൺ അണ്ടർ നെറ്റ് realizable value. I will discuss when I do the sum. Ready? And the realizable value is actually 75% of your carrying amount subjected to 10%. Now actually this idle machinery is actually disposed for 75%. So this is a 5-mark question. I think this is too unfair. Ready? Because it's a very long question and and they just only give 5. So in that attempt, this question is actually something heavy. Ready? Genuinely. But they gave some easy question in the same attempt. Maybe to balance that, they give some toughest question. Clear? So now I'll just go through the answers. So on 2015, they incurred a lot of cost. So we have to capitalize it. Ready? So we preparing the machinery account. So remember the basic clarity is when the asset is increased, we debit. When the asset is decreased, we credit. Clear? So when we purchase or construct, this cost is incurred. So the total cost is incurred is this. Ready? So we have 10 lakh 80. All this cost is a direct cost. Clear? Now on that year end, actually the asset is not yet ready to use. So no depreciation on this year. No depreciation. But remember, since it's a qualifying asset, we can capitalize the interest. 5 lakh into 12%. So 5 lakh into 12%, 60,000. So 10 lakh 80 plus 60, the closing balance is 11 lakh 40. So no depreciation because asset is not yet ready to use. Ready? Clear? Okay, that's it. Now, in the next year, the starting balance is 11 lakh 40, and on 110 there is a trial run cost 20 trial run inflow. So trial run cost shall be added and inflow shall be deducted, or you can alternatively take a net receipt of 15,000 here. Ready? Both the way it's okay. Clear? On 110. Clear? Now you remember, on 1117, the asset is actually become ready to use. So the borrowing cash can be capitalized only up to the date of construction is completed. So here construction, the asset become ready to use. So we will capitalize only up to this period. That means from 1/4/16 to 1st January 17, there is 9 months. So the interest for 9 months will be 45,000. That can be capitalized. Clear? Now on 1/1/17, there is a government grant is receiving. So hence the machinery account. So when a grant is received, the entry will be bank account debit to machinery account. So it should be deducted. Clear? Now on 31st March 17, we have to charge the depreciation, but depreciation will be charged only for 3 months. That means 1/1/17 to 31st March. Ready? So this depreciation calculation will be taken as a separate working note. So you can refer my working note. So for that, first we have to calculate the initial cost. So on 1/4/16, just a minute, sorry, on 1/4/15, just a minute, there is a change. 1/4/15, 11 lakh 40 was the total cost. Clear? So 11 lakh, sorry, extremely sorry, this is actually on 1/4/16 itself, because 11 lakh 40 is the summation of first this 10 lakh 80 plus 60. So on 1/4/16, 11 lakh 40. Clear? That's it. Now trial run cost is adding net amount 15,000, borrowing cost again for 9 months minus 2 lakh. So initial cost is 10 lakh. So 10 lakh into 10 lakh. So now how do you calculate the depreciation? Ready? So 10 lakh is the initial cost. So 10 lakh minus residual value is 2 lakh divided by 4 years into 3 divided by 12. So depreciation will be 50,000. So the balance CBD is 9 lakh 50. So next year 9 lakh 50 is the opening balance. Now on 110, 110 2017. That means after 6 months, the asset is sold for 93,500. One machine is sold. So when an asset is sold, asset will be decreased and it will be credited by bank 93,500, and depreciation on sold item will also be credited. That means from 1st April to 1st October vareyulla 6 മാസ depreciation. Ready? So our depreciation കാണുന്നത് only on one item. So remember, how much was the initial cost? Initial cost was 10 lakh. So this 10 lakh is for 10 machine. So for one machine, the initial cost is 1 lakh. So 1 lakh is the cost of one machine. Minus scrap value for one machine is 20, because total scrap value is 2 lakh. 2 lakh divided by 10, you will get 20,000. Divided by 4 into 6 divided by 12. So you will get 10,000. So now, whenever there is a sale happen, there will be a profit or loss. So for that, you have to compare sale value versus carrying amount on that date. So remember, carrying amount on 1/1/17, that means the asset become ready to use for one machine was 1 lakh, minus from that date to 1/1/10/17, that's a date of sale. There is a 9-month gap. So the depreciation for that 9 month, ready, is 15,000. So now the carrying amount is 85,000 and the sale value is 93,500 and the profit will be 8,500. So if it is profit, it will be debited in machinery account. So you note it. So 8,500, there is a reference of working out. Now are you okay? Now during that year, there's no other transaction, so we have to calculate the depreciation on remaining nine machines. So the 9 machines value will be 9 lakh, and the scrap value for 9 machine will be 1,80,000 divided by 4. 1 year depreciation will be 1,80,000. So then the balance C/D 6,70,000, that will be carry forward at balance B/D. Ready? That's it. Balance B/D 6,75,000. Now remember, during this year end, remaining useful life is 4 years and the residual value is re-estimated 2,20,000 and the property is revalued upward by 45,000. Correctly, in this kind of situation, this revisions is happening on 31st March 19. Ready? So the revaluation should be added after we deducting the depreciation for 18-19. But actually in ICMA material, they're taking an assumption, then only we will match with their answer. We assume that the revaluation is done at the beginning of the year, otherwise answer will not match with ICMA. But usually in this kind of situation, we will charge the depreciation first, then we will compare the carrying amount and fair value, then we will do the revaluation. But here you have to take this assumption. Ready? That's it. Okay, so that means from the day beginning itself, there is an upward revaluation of 45,000. Clear? Now during this closing year, 31st March 90, depreciation will be charged based on news figures. So opening value was 6,75,000 plus 45,000, that was the revised carrying amount, minus revised scrap value is 2,20,000 and remaining useful life is 4. So the depreciation will be 1,25,000 and the balance C/D will be 5,95,000. Clear? Okay. Now balance B/D for the next year will be 5,95,000 sorry, 5,95,000. Now on 31st March 20, they start to depreciation in WDV. Clear? So now onwards the calculation will be, this is the WDV for the year and into 20%, and this will be the balance body. Now the company decide to adopt WDV method. That's over. 31st March 21, the machinery became idle and retired from the active use, but not held for disposal. ആ ഇയറിൽ അത് എന്തായിട്ടില്ല, ഹെൽഡ് ഫോർ ഡിസ്പോസൽ ആയിട്ടില്ല. ആക്ച്വലി ഇപ്പോ ഒരു അസറ്റ് ഹെൽഡ് ഫോർ സെയിൽ നോൺ കറണ്ട് അസറ്റ് ഹെൽഡ് ഫോർ സെയിൽ എന്ന് പറഞ്ഞിട്ട് ആക്ച്വലി ഒരു ഇൻഡേയസ് 105 എന്ന് പറഞ്ഞിട്ടുള്ള ഒരു ഇൻഡേയസ് ഉണ്ട്. പക്ഷെ അത് നമുക്ക് CMA ഫൈനൽ സിലബസിൽ ഇല്ല. അതിലാണ് ആക്ച്വലി ഇത് ഡെപ്ത് ആയിട്ട് കവർ ചെയ്യുന്നത്. അപ്പോൾ സ്വാഭാവികമായിട്ട് ഒരു അസറ്റ് ഹെൽഡ് ഫോർ സെയിൽ ആയി കഴിഞ്ഞാൽ അന്ന് മുതൽ അത് അതിൻ്റെ കോസ്റ്റിലല്ല കാണിക്കേണ്ടത്, നെറ്റ് റിയലൈസബിൾ വാല്യൂലാണ്, NRV എന്ന് പറയും. Because as per prudence concept you have to show as per NRV, but on 31st March 21 it is not held for disposal. That means we still show on the cost. Ready? Okay, 31st March. So balance B body for that year, and again we charge the depreciation at 20% on this one. 4,76,000 into 20%, you will get this figure 95,200 and the balance C body. Since anna asset held for sale ആയിട്ടില്ല, അതുകൊണ്ട് ആ കോസ്റ്റിൽ തന്നെ കാണിച്ചാൽ മതി. ഇനി അടുത്ത വർഷത്തെ ഓപ്പണിംഗ് ബാലൻസ് ഇതായിരിക്കും. Now ആ ഇയറിൽ 31st March 22 the idle machines are held for disposal. Ready? And machinery could not be disposed of till the end of the year. അതായത് ആക്ച്വലി അസറ്റ് റെഡി ടു ഡിസ്പോസൽ ആയിട്ടുണ്ട്, പക്ഷെ ആക്ച്വലി സോൾഡ് ചെയ്തിട്ടില്ല. റെഡി? On the realizable value of machine is 75% of carrying amount. That is the NRV. So നിലവിലുള്ള carrying amount എത്രയാണോ അതിന്റെ 75%. But subject to net selling cost is 10% of realizable expense. So realizable value is carrying amount in a 75%. But net realizable value is after deducting selling cost 10%. So this will be the answer. Ready? Now this will be the NRV. Ready? So now the opening value is 3,80,000 and NRV is 2,57,000. So this difference is a loss. It's a future loss. It shall be taken to P and L. So that shall be reduced by crediting into machinery account. So by P and L. So loss. Ready? Okay, that's it. Now the next year on 31st March 20 the asset is actually sold for 75% of carrying amount. That means this was the opening carrying amount and it is sold for 75% of this. Now the difference is low. So this is the question answer. Ready? So actually in my perspectives this is an underrated mark for this question. Actually this deserves a 7 to 8 mark at least. Ready? So now, but maybe in this attempt they are giving some easy questions. Yeah, that's it. So from on a faculty side I did all the clarity related to this answer. Ready? Now we moving on to the next question. That's also a bit tricky, related to internal reconstruction. So I'm moving on to that question. Ready? So question 2B. Okay, let's see that question. So slightly moving on. Haldi Limited provides you the following information. They give you equity shares, cumulative preference shares, P&L debit balance, first debenture and second debenture. There are two debentures. Ready? And debenture interest outstanding, creditors and plant and machinery. Dividend on preference shares are in arrears for 3 years. So last 3 years dividend arrears lana. Ready? That's it. Now the following scheme of Indian reconstruction was approved and implemented. So before reading all these items, I'll read the question. Actually, here they don't ask the journal entry. They just ask the capital reconstruction account. So whenever you read a question from the exam hall, so first try to check what is their ultimate requirement. Then you think for this what I have to do. Ready? So here we only need to bother the items which affect capital reconstruction account. That means CR, capital reconstruction account, will be touched only when there is a profit or loss during Indian reconstruction. If there is a change of old debenture into new debenture, it will not affect CR. So you don't need to overthink that kind of matters. You only think the matters which influence our capital reconstruction account. So in that way I'll go. Ready? So all the equity shares are to be converted into same number of equity shares of 5 each, 2.5 paid up. Okay, so here all the 10 rupee shares are converted into 2.5 rupee shares. Remember guys, actually the new face value is 5, but they specified it will be converted into 2.5 paid up. Ready? Okay, that means in future the shareholders again has to contribute 2.5. So remember, actually when I reveal the concept, actually already the shareholders contributed 10 rupee into the company. So now in future they again have to contribute 2.5 because now they treat it as 2.5 paid up. Ready? That means the rest of 2.5 will be called by the company in future. That means actually the shareholders have to bear 12.5. Now that 12.5 will be, actually the shareholders have to be contributed 12.5, but now the new face value will be treated as 5. So actually the company is cutting 7.5. So you don't need to overthink like this. Ready? You only think that actually what is a new paid up value? What is a new paid up value? So actually from 10 to 2.5. So actually there is a reduction of 7.5. So this is a profit. This is a profit for a company. So it will be credited in capital reconstruction account. So remember, in capital reconstruction, all the profits will be credited. All the profits will be credited, and all the losses related to Indian reconstruction will be debited. Clear? So this is a profit. So how much is the total profit? 500 divided by 10 into 7.5, so you will get 375. Now, so in short, you have to only bother to paid up value. For convincing that's why I shown this way. Clear? Okay. Now the preference shareholders are converted from 6% to 15%, but revalued in a manner in which the total return on them remains unaffected. Okay, so I'll read this point first. Ready? So remember, here 6% preference shares are converting into 15%, but the amount of return should be same, unaffected. That means existingly 100% into 6%, 100 into 6%. What is the preference dividend? 6. This should be maintained by 15% rate. For that, the capital should be 6 divided by 15%, that is 40. That means preference share capital will be reduced from 100 to 14, but the rate of dividend will be increased. So there is a reduction of 16. Then again it's a profit which will be credited. Clear? I'm not saying the complete journal entry because in this question you don't need to think it. Clear? That's it. Okay. So there's a calculation. Ready? 100 into 6%, that is existing, divided by 15%, that is a 40 rupee. So currently we have 100. So the reduction is 60. Now the next sentence is, ready, just a minute. The next sentence is 4 equity shares of 2.5. 4 equity shares of 2.5 means 10 rupee worth. Paid to issued for each of 100 rupee arrears of preference dividend. അതായത് പ്രിഫറൻസ് ഡിവിഡൻഡ് അരിയേഴ്സ് എത്രയാണോ ഉള്ളത് നോക്കുക. അതിലെ ഓരോ 100 രൂപയ്ക്കും 10 രൂപയുടെ ഷെയർസ്. 10 രൂപ എന്ന് പറയുന്നത് 2.5ന്റെ 4 ഷെയർസ്. റെഡി? സോ ഇൻ ഷോർട്ട്, ഫസ്റ്റ് വി ഹാവ് ടു ചെക്ക് ഹൗ മച്ച് ഇസ് a 3-year cumulative dividend. Ready? So 3-year cumulative dividend is 100 into 6% into 3. So you will get 18 rupee. 18 lakh. Divide by, for every 100 rupee, 10 rupee will be paid. So for us, this is a loss book, because this liability is not in the books. So remember, ബുക്കിലില്ലാത്ത ഒരു ലാബിലിറ്റി, ഒരു കണ്ടിൻജന്റ് ലാബിലിറ്റി waive ആണെങ്കിൽ there is no entry, but if it is paid, settled, it's a loss. So capital reconstruction account debit to share capital. So how much we have to give? For every 100 rupee arrears, we have to give 2.5 for shares. That means 10 rupees. So we will get 1.8 lakh. Clear? That's it. Now the next point. So actually the sentence is bit lengthy, but we don't require too much information in CR account. So I'll tell you. Mr. A hold 10% first debentures for 40 lakh. അതായത് മിസ്റ്റർ എ എന്ന് പറയുന്ന ആളുടെ കയ്യിലാണ് ഈ കമ്പനി ഇഷ്യൂ ചെയ്ത ഫസ്റ്റ് ഡിബഞ്ചറിൽ 40 രൂപ. റെഡി? ദാറ്റ്സ് ഇറ്റ്. ആൻഡ് അയാൾ തന്നെ 60 ലക്ഷം രൂപയുടെ സെക്കൻഡ് ഡിബഞ്ചറും ഹോൾഡ് ചെയ്യുന്നുണ്ട്. അതായത് മൊത്തം 40 പ്ലസ് 60 ടോട്ടൽ 100. He is also a creditor for 10 lakh. So that means again 10 lakh, 110 lakh മൊത്തം കമ്പനി അയാൾക്ക് കൊടുക്കാനുണ്ട്. Now Mr. A is to cancel 60 lakh of his total debt. അതായത് 60 ലക്ഷം രൂപ അയാൾ സറണ്ടർ ചെയ്യാണെന്ന് പറഞ്ഞാൽ for us it's a profit. So in short ആ 60 ലക്ഷം രൂപ നമ്മൾ ക്യാപിറ്റൽ റീകൺസ്ട്രക്ഷനിൽ ക്രെഡിറ്റ് ചെയ്യണം. ഇത് നമുക്ക് ഈ ക്വസ്റ്റ്യനിൽ ചിന്തിക്കേണ്ടതുള്ളൂ. ഇനി ഇവിടുന്ന് അങ്ങോട്ട് ഇല്ല ഇൻഫർമേഷൻ ഒന്നും ജേണൽ എൻട്രി എഴുതുമ്പോൾ നമുക്ക് ആവശ്യമുള്ളൂ. I'll just read it. Here this is the പോയിന്റ്. എത്രയാണോ വെയ്വ് ചെയ്യുന്നത് അതല്ലേ പ്രോഫിറ്റ് വരിക. ഇതാണ് അയാൾ വേണ്ടെന്ന് പറയുന്നത്. ആൻഡ് ബാക്കി ഇനി അയാൾ 10 ലക്ഷം രൂപ കമ്പനിക്ക് കൊടുക്കാമെന്നും ബാക്കിക്ക് ഡിബഞ്ചേഴ്സ് കൊടുക്കുന്നുണ്ട് എന്നും പറയുന്നുണ്ട്. റെഡി? അതൊന്നും നമ്മൾ ഈ ക്വസ്റ്റ്യനിൽ ബോധർ ചെയ്യണ്ട. ഈ ക്വസ്റ്റ്യനിൽ എത്രയാണ് വെയ്വ് ചെയ്യുന്നതെന്ന് ബോധർ ചെയ്താൽ മതി. റെഡി? നൗ യു ഓൺലി ബോധർ ദ എമൗണ്ട് ഹി സറണ്ടേഡ് in CR. That will be only the matter. Now Mr. B hold remaining 10% of first debenture and 10% of second debenture and also creditor of 5 lakh. ഇത് എത്രയാണ് എന്നൊന്നും നമ്മൾ ചെക്ക് ചെയ്യേണ്ട കാര്യമില്ല, because no journal entry we are writing. How much he cancelled, that is openly giving. So this is a brilliant question. Students may dilute their thought process into many things, but actually in this we only need to bother how much they surrender. So B is surrendering 30 lakhs. So I'm crediting that. Clear? Ready? Okay, his total and to accept. So whatever, I'm not reading because that's not my focus area. Now trade creditors other than A and B. So that means how much is the trade creditors other than A and B? So A hold creditors of 10, B hold 5 lakhs. So total creditors is 165. So out of that 15 A and B. So now rest is amount is 150. Ready? Now let's see how they arranging. Are given an option. So for 150 lakh creditors, company gives an option either to accept equity shares of 2.5. ഒന്നുകിൽ equity shares of 2.5. Ready? For the amount due to them. or to accept 80% of amount due to cash. അതായത് നിങ്ങൾ ഇക്വിറ്റി ഷെയർസ് ആയിട്ട് എടുക്കുകയാണെങ്കിൽ നിങ്ങൾക്ക് ഫുൾ എമൗണ്ട് കിട്ടും, ഫുൾ എമൗണ്ട് വി വിൽ ഗീവ് ഫുൾ എമൗണ്ട്. ബട്ട് ക്യാഷ് ആണ് എങ്കിൽ വി ഓൺലി ഗീവ് 80% ഓഫ് യുവർ ഡ്യൂ എമൗണ്ട്. സോ ദാറ്റ് മീൻസ് 20% സാക്രിഫൈസ് ചെയ്യണം, സറണ്ടർ ചെയ്യണം. റെഡി? സോ 20% സാക്രിഫൈസ് ചെയ്യണം. ക്ലിയർ? സോ ഇറ്റ് വിൽ ബി കം ടു ക്യാപിറ്റൽ റീകൺസ്ട്രക്ഷൻ അക്കൗണ്ട്. റെഡി? നൗ എത്രയാണ് അവർ സാക്രിഫൈസ് ചെയ്തതെന്ന് നോക്കാം. എത്ര ആളുകളാണ് ക്യാഷ് ഒപ്റ്റതെന്ന് നോക്കാം. 40% ഓഫ് ക്രെഡിറ്റേഴ്സ് ആക്സെപ്റ്റഡ് ഇക്വിറ്റി ഷെയർസ് whereas balance accepted full settlement in cash. That means 150 lakhന്റെ 60% എന്ത് ചെയ്തിട്ടുണ്ട്? ക്യാഷ് ഓപ്ഷൻ ആണ് തെരഞ്ഞെടുത്തതെന്ന് പറഞ്ഞാൽ 90 lakh. ഈ 90 lakhന്റെ 20% പ്രോഫിറ്റ് അല്ലേ മക്കളെ? ദാറ്റ്സ് ഇറ്റ്. സോ ഇത് എവിടെ വരും? ഇവിടെ വരും. റെഡി? CR അക്കൗണ്ടിൽ ക്രെഡിറ്റേഴ്സ് എന്ന് പറഞ്ഞിട്ട് വരും. സോ ടോട്ടൽ 165 ആണ്. അതിൽ 15 രൂപ എയും ബിയും ആണ്. ബാക്കിയുള്ളതിന്റെ 60% ഇൻറ്റു 20% 18 രൂപയാണ്. റെഡി? Now any surplus after writing of the various laws should be utilized in writing down the value of plant and machinery. അതായത് now remember ഇപ്പൊ നമ്മൾ ചെയ്തു വെച്ച CR അക്കൗണ്ടിലെ ബാലൻസ് എത്രയാ നോക്കുക. അത് യൂസ് ചെയ്തിട്ട് any surplus after writing of various losses. So here losses we have a loss. Also there is a silent loss of 50 lakh of P and L. So remember when there is a loss it should be written off. They clearly saying it. Ready? So when we writing off, the entry will be CR account debit to P and L. You know it. Now the rest of the balance is 526. This should be written down. So CR account debit to PPE. So how much should be written down as this should be as a balancing figure. Clear? That's it. So this is a beautiful question. Clear? So in ICME answer key they only give for previous answer they only give this answer hint. Ready? So that's why I'm coming in this video. Ready? So now you're okay. Now there's a business combination question. It's a amalgamation question 3A. Okay, so a business combination question. So actually this was a question we done from the classroom. So in business combination chapter, whether it is in offline or online, I'll do this additional questions. So in that additional PDF the question 1, you remember Dark Limited and Fair Limited amalgamated a new company Bright Limited formed to take over. The same question they literally asked. Ready? So we have done this question from the classroom. Ready? So PZ has to be calculated by using net payment method. Debenture taken over value you have to calculate, and there is a statutory reserves issue. Liquidation expense is paying, and all the assets and liabilities are taken over, and authorized capital is this. After issuing required number of shares, Bright is issued shares to public. The issue was fully. So this question we done from the classroom. The same ditto they're testing in June 23. So I'm not reading it all. Ready? So this is the same question. Clear? Okay, that's the same question. Clear? So the public issue. Clear? That's it. So in public issue, so remember while we coming into this answer key, I give this will be the PZ calculation. Net payment method, you have to calculate the PZ net payment method. Then you have to calculate the taken over value of debenture holders. That's a working note. Then you have to calculate the net asset and goodwill. So you have to calculate the net asset minus so net asset then PZ. When you compare this will be the goodwill. But remember this is gain on bargain purchase. But remember, actually liquidation expense is paying. So when liquidation expense is paying, the entry will be goodwill account debit to cash, or GOBP account debit to cash. Ready? So in short, it will be goodwill will be increased and GOBI will be decreased. So since both the company have goodwill and GOBI, we take net goodwill. This will be the net goodwill. And shares to public, you have to calculate total shares. We have 50 lakh. Out of that PC we issued 35 lakh shares, so 50 lakh shares is to be issued. But when you checking the answer key, so remember, when I was done this question from the classroom, remember, actually the shares, after issuing the required number of shares, the Bright is issued balance shares to public. But in question, they don't mention at what amount this new issue is doing, whether it is at 10 rupee or the new company's fair value is 35. So they are not mentioning. But practically more right is 35, because the shares will be issued at the prevailing market price. Ready? That is a fair price. Clear? But so when we done the sum, maybe we done by using 35, but in the same answer key we mentioned that the students could alternatively sold by using 10 rupee also. Ready? So both the way it's correct. Ready? So when we coming into ISMA answer key, they take 10 rupee as a first choice. Ready? 10 rupee as a first choice. So that I clearly write. Alternatively, the students can take the issue price as 30 rupee. In this question, they 30. So hence the cash will be increased by this and this will be the talent. Ready? All the clarities I'm giving here, since the same question we done from the classroom, I'm not going much on that, but you have to do it. You can check my answer key. Clear? Ready? So okay, that's it. This will be the balance sheet in their question. So just in their answer key, they just give the total 1910. Ready? So our answer is also 1910. This is the balance sheet we have. Ready? That's it. Okay. Clear? So yeah, now moving on to the next question. Clear? So it's a theory question. Indes distinguish AS 14 and Indes 13. So actually this I may be mentioned from the class. That means a probable theory question they will ask related to AS 14 versus Indes 103. Since it's a theory question, I'm not explaining, but I mentioned, actually you know that this key points you have to mind. So this repeatedly they asking, so study seriously this question. You just read it. I'm not explaining. Clear? So in this session we more focused on the struggling question. Clear? That's it. Now this question is the next question is this, which is the same question we done. Ready? From the classroom. So this is a special question, so you can refer a video in my recorded class. So this I was already done. Ready? So this will be the answers. Answers will be I'm not giving that answer here, but answers will be this. This will be the answers. Clear? So okay, since the same question I'm done already from the classrooms, I'm not doing. Ready? That's it. Okay, so now coming into the next question. So it was a equity method consolidation question. Clear? So 6 mark question. Given below are the extract of S Limited and P Limited. They give S Limited, that's a subsidiary, probably that may be the subsidiary company. They gave balance sheet and fair value. Ready? So all this item and not a point, there is a contingent liability. That's a tricky point in this. Clear? Now market price of equity shares of P Limited and S Limited are 16 rupee and 15 rupee respectively on 31st March 22. That is a date of this balance sheet date. Clear? P acquires 25% stake. So remember, when they acquire 20 to 50, we will do symbol consolidation or equity method consolidation. You remember that. Ready? And the purchase consideration is settled by issue 160 equity shares. So here P Limited is buying, so 160 into their share price is 60. Clear? So that will be the PZ. Clear? Okay. Now for which no accounting, so entry has been given. That means in this balance sheet that has not been recorded yet. Ready? So during 22-23, S Limited earn a profit of 2000 P and L balance and OCI 1200. Pass the journal entry on the date of question on the year end. This was a question we done so many times from the classroom. Ready? On the date of acquisition, so investment, the total PZ will be 16 into 160. It will be 16 into 160. So 2560. Out of that, this will be the face value and this will be the premium. Clear? Now at the end of the year, investment will be increased by share of profit, P and L and OCI. So total how much is a profit? 2000 into 25%, 2000 into 25%, and here 1200 into 25%. So that is an easy load in this. Ready? Equity method question. Clear? Okay, that's it. That's over. Ready? Now coming into this question we actually done from the classrooms. Ready? Okay, so I'll give the reference of similar kind of question and then I'll just go through the answers. Ready? Same similar pattern of question I'm already done from the classroom. So I'll give the reference in my book. In share valuation chapter, the question 5. A question like this. So the same kind of almost 99% part is same, but two items. So first part, equity share capital fully called up, preference reserves, so PP undervaluation, overvaluation, 10% trade investment, non-trade investment. Now 10% debentures, 60% debentures are to be redeemed prior to valuation of shares. So if debentures are to be redeemed prior to valuation of shares, so remember in future there will be a savings in interest, because if 60% debentures is redeemed now then there won't be no interest in future, so there will be a decrease in expense in future. So in FMP there will be a future adjustment, decrease in interest that will be added. Now in capital employed, remember when a debenture is redeemed, the entry will be liability will be reduced, debenture and cash will also be reduced. So when we calculate the capital employed, liability has to be reduced and asset has to be reduced. But instead of doing so, an asset and liability is reduced with equal amount, then there is a zero impact in net asset. Even if you are not reduced this, still the answers will be same. So in capital employed, you just ignore this. But in FMP add back interest savings. So that's it. Now they gave average profit before tax. In my question they gave FMP. So FMP means they already done past adjustment all, but in this question they give average profit before tax. So now we have to calculate average adjusted profit. Average adjusted, for that we have to deduct non-trade investment income. Clear? So and with effect from next year, rate of tax will be this, and there is an increase in managerial remuneration. So and normal rate of return, expectation rate of earnings returns, earnings is 9%. Ready? Okay, so calculate the fair value. So for that, first we have to calculate the intrinsic value. So I'm not detailing it because since the same pattern of question we done. So question 5a. So first we have to calculate the FISH, that means funds available for equity shareholders. So for that, since here they don't give asset details completely, we go with liability side approach. Liability side approach, we have share capital plus reserve plus revaluation increase net amount. Ready? So for that, we are taking a separate working note. So on PPE there is an undervaluation and overvaluation. So 1,50,000 and 25,000, and on trade investment values are undervalued, so 1,000. So you have to deduct this undervaluation and this undervaluation, so that is a net revaluation. So you can check it. So since same pattern of question we done so many times, I'm not repeating it. Clear? That's it. Okay, now revaluation increase. Clear? That's it. Now net asset and then notional call, because there is unpaid portions are here, 2 rupee and 2 rupee on 4 lakh shares and 2 rupee on 2 lakh shares. So yeah, so we will get the FISH. Now number of shares is irrespective of partly or fully we take, but if different face value we have to convert. So this will be the number of shares. So now when we calculate the intrinsic value, things will be like this. Clear? Okay, and now you have to calculate earnings yield valuation. For that you have to calculate FMP first. Ready? So FMP is to be calculated first, average profit before tax minus non-trade investment. So remember, while calculate non-trade investment, income will be calculated on face value. 80,000 is the total investment. Out of that, 10% is trade, 90% is non-trade. So 80,000 into 90% into 10%. So then we will get average adjusted PBT. Then we have to adjust the future adjustments. So there's a 2 item. Then we will get FMP before tax. Then you deduct tax. Then you will get FMP after tax. Then you deduct preference dividend. Then you will get the FMP. So once you get the FMP, then paid up share capital, which we already calculated as 63 lakh here, 63 lakh. So 63 lakh. Now earnings yield will be this. Earnings yield will be this. Now you can calculate the share value by using the formula. Okay, so you can check it. So formula will be earnings yield into paid up value divided by NRR. So by using that, 10 rupees value will be this 3 rupee. Now you have to calculate the fair value. So this is the exact answer, yeah, as per the ICMAI. So is clear. That's it. So ready? Now that question is over. Now moving on to the next question, that is a financial instrument question. Clear? So let's see the question. Ready? Okay, so at the beginning of the year 1, Black Limited issued 40,000 debentures with a face value of 100 debenture at par. So total inflow is 40,000 into 100 rupee, that is 40 lakh. That is a total inflow. Ready? Now the debentures have a 6-year term, so that is a total term. The interest is paid half yearly, so the half yearly rate will be 4.5%. So if 6 years 6 years item is paying half yearly, then 12 times interest payments will be there. Ready? 12 time installment will be there. Clear? Now the bond holders have an option either to convert into two equity. That means there is an equity option. That means it will be converted into equity shares, two equity shares. Ready? The bond holders have an option to convert half of the debentures. Half of the debentures means maximum 20,000 into two equity shares. Ready? So the bond holders, this option, this can be converted at the end of year 3. So that means after year 3 there will only be remaining half of debentures the bond holders not exercising. That means 20,000. 40,000 is the total, 20,000 is already if it is converted, then rest of the debentures is 20,000. Their amount will be repaid at par to the extent of 50 per debenture at the end of 3. So in short, either it will be converted or it will be repaid. So that means that's a liability component. Now the non-convertible portion. So sorry, the non-convertible, actually that non-convertible portion is actually 20,000 debentures will be repaid at 10% premium at the end of year 6. So at the time of the issue, actually the market interest rate without conversion rate is 10.25%. Now that is an embedded derivatives because there is an equity options and a liability option. So past journal entry at the initial time. So the present value for first 6 years at 5%. Okay, so they gave the present value factor at 5%. So this is a tricky point. Ready? So this 5% is a half yearly interest rate. That means how this 10.25% is a per annum rate and half yearly rate, how it be 5%? Remember, so 10.25 divided by 2, it should be let's say 10.25 divided by 2, it should be 5.125. Remember, so this is not the semi-annual rate because there might be a compounding effect. Ready? So you may be heard from the foundation. Ready? So remember, while you seeing, just imagine you have 100 rupee at the beginning of the year. So now for 6 months the interest rate is 5%. Just imagine, now it become 105. So now for the next 6 months interest will be calculated on this cumulated balance. So if you calculate the 5% on this, then how much you will get? 105 plus 5%, 110.25. So now if 110.25 is the total amount, what is the factor? The factor is 1.1025. This is an annual factor. Okay, to convert into half yearly factor, there is a mathematical formula. Ready? So 1.1025 root minus 1. How much you will get? You just type 1.1025 root of minus 1. Then you will get 0.05, that means 5%. So this is a semi-annual rate or half yearly rate. So that's why they give 5%. Clear? But you don't need to be overthink about this. They directly given in the question. So for the clarity I discussed. Okay, that's it. Now for passing the journal entry, first you have to calculate the liability portion. So for that you have to calculate the present value of liability component, which is very easy. So remember here the annual actual interest is 9, so the semi-annual rate will be 4%. So that is the actual. Ready? So now for first 3 years, so for first 3 years, it is not converting, so the interest will be on entire amount. Ready? So the interest will be on the entire amount, so it will be 40 lakh into 4.5%. So it will be 40 lakh into 4.5%. It will be 1,80,000. So now for the next 6 to 12 years, actually either it is converted or it is redeemed. So the rest of for the rest of 6 year, the only will be 20 lakh debenture into 4.5. So the for 6 to 12 years, 90,000. Now when you convert into present value, there is a 5% prevailing interest rate based factor they give. For first 6 years, 5.076. So you multiply and then you will get this. Clear? Now for the next for first 6 years, 5.076. Clear? So remember, just imagine for I'm writing here for first 6 years 5.076. Now we want 6 to 12 years, which is not given in question, but they gave 1 to 12 years. Total present value is 8.863. Ready? 8.863. So now if total is this and for first 6 years this, then what will be the balancing figure? Balancing figure will be this. So this will be the calculation. Ready? So that's it. A very tricky point. Now on 12th year, we will redeem 20 lakh into at 20 lakh into at 10% premium. That means 1.1. Or you can do 20,000 debentures are there and 100 is a face value, 110. Then you will get 22 lakhs. So last year present value factor is this. So then you will get the present value of liability component. Thus, ready? Now total inflow is 40 lakh and there's a present value of liability component. Then the equity component will be this. So there's a similar embedded derivatives is similar concept of our share based payment. There is a compound instrument. Ready? I'm not explaining it. Clear? So the journal entry will be cash account 40 lakh to liability component, this equity component. Why there is an equity component? Because there is a chance for converting into equity shares. So you have to show in your liability in your balance sheet as an equity part. Clear? Entire 40 should not be shown as a liability. That's a sense. So you are okay with that question? Now we moving on to a most beautiful question in this question paper, that's consolidated related, but this question is almost similar to question which B? 4B, but that was equity method. We purchased 25%. But in new question, so remember in new question, remember they gave same data. Same data, I'm not repeating. So there is a contingent liability here also, clear, that's it. And market price of B and A. Then they gave three cases. So the case A, let's answer the case A first, clear. Case A first. So here P Limited acquired 75% stake on 31st March 23. So that is a same date of the balance sheet. Ready? 23. And the PZ is settled by issue of 800 equity shares for which no entry has been given. So here 75%. So that means it's a complete consolidation. So NCA is measured at proportionate net asset. Clear? So in this question, what is the question requirement? Journal entry in P Limited. So on date of question, the journal entry, if it is complete consolidation, that means more than 50%, assets at fair value to liability at fair value to PZ, difference goodwill, sorry, to NCA there will be at 25% and goodwill or GOBP. Clear? That's it. So now here this is a fair values. This is a fair values. Clear? That's it. So when we take their assets, so the entry will be PPE. So 10,000. Investment property 7,000. Investment, but they since fair value is not separately given, this is equal to fair value. Current asset is this. Clear? So this is the four assets we have. Clear? Ready? There's no problem. Now liability, but remember we only have this liability in the books. In out of the books there is a contingent liability. So remember this I was discussed in business combination chapter. If acquiry books has a contingent liability, the fair value shall be taken. Take it as a normal liability. It should be at fair value. Ready? 750. But when we are writing the entry, for us it is not a contingent liability. It is a normal liability. Normal liability. Ready? 750. Clear? Now what is a PZ? What is a PZ? So PZ is, remember how much we give? 800 shares. 800 into 16. Total 800 into 16. 12,800. Out of that face value is 800 into 10 is a face value and 800 into 6 is a premium. So instead of taking it as separate entry, they write share capital and security premium in the same journal entry. You can also do like that, or you just write PZ and you pass a second entry PZ settlement. Both the way it's okay. Now NCA will be calculated as a proportionate of net asset. Ready? So here the net asset you have to calculate. Clear? So while you calculate the net asset, remember the net asset will be net asset. Usually we calculate a liability side approach in consolidation chapter. Ready? Consolidation chapter. Okay, so if we do so, the net asset will be share capital plus reserves and surplus plus revaluation increase. Ready? Okay, so I'll show this as a separate working note. Share capital of this company, yes Limited, is 8,000 and other equity is 6,000 and revaluation increase is 2,000. How do get this revaluation increase? So each asset, the revaluation increase we have to compare. So when we compare this, you will get 1,000 increase and 2,000 increase, no increase, 300 decrease. Clear? That's a 300 decrease. Now remember, this is a tricky point in this part. Ready? So when, just like the other items, we see that there is a decrease of 50 rupee in contingent liability. That is wrong. Why wrong? Because in for contingent liability, the book value is absolutely zero. Contingent liability will not be taken in books, so it has a book value. So they gave maybe their estimated amount is this, but in book you know that it has a zero value. That means the entire 750 is like an increase of contingent liability. So 750. So remember, for us it's a loss. Increase of liability is a loss. Now trade payable, decrease of liability, that's a profit, and increase of borrowing, that's a loss. So net revaluation increase is 2000. Ready? You will get net asset 16,000. But in consolidation chapter we usually do like this. Because in most of the question we don't have too much revaluation increase or like that. That's why we prefer to do liability side approach. But in business combination and share valuation chapters we prefer to do asset side approach. But here you can also alternatively do asset side approach. So in that case you take all these assets fair value minus this liability and this liability. Ready? Both the way I gave here. So in short, you will get the net asset 16,000 there. Ready? So 16,000 into 25 percentage, that is the amount here we have. Clear? That's it. Okay, now you check where is the balance figure come. It is goodwill. You don't need to take it as a separate working note, you just do balancing figure. So that's it. So that is a case A. Clear? So now pass a journal entry in the books of P Limited. They just say in the books of P Limited. So you have to write the journal entry in separate book and consolidated book. You see the journal entry in consolidated books already. Now in consolidated books. Now in separate books things will be very easy. Investment account debit to share capital and security premium 12,800. You know it. Clear? That's it. Okay. Now case B. Let's see into case B. Here this is actually a step acquisition question. Clear? That's it. So I'll read it. P Limited acquires 45% stake in S Limited on 31st March 23 and PZ settled by issue of 450 shares. So 450 into 16, that will be the new consideration. Clear? So like 7,200. Clear? And for which no accounting entry. Now the investment in the books of P Limited shows the cost of previously held interest 30%. So remember, already there is a 30%. Now there is a 45% increase. So now there is a total 75%. So in that case, new NCI will be 25. So actually this is a step back question. So here from equity method, you jumping into complete consolidation. At that time the entry will be assets at fair value to liability to PZ and to old investment to NCI difference goodwill or GOBI. Clear? That's it. Are you okay? But remember, in step back question, before passing this entry, you have to remember some special points. First, remeasurement. Clear? That's it. So remember here actually our cost value of 30% interest is given in question, which is 3,500. But that was the investment in S Limited. That was a cost of amount. But as of now, what is the fair value of that item? it is not given in question, but you can calculate based on this fair value. So as we discussed in the last case, their current net asset is 16,000. So now 16,000 is the total net asset of Yes Limited into 30 percentage. So that is 4,800. So that is the fair value of that old investment. So that should be remeasured from 3,500 to 4,800. So the first entry will be remeasurement entry. I'm clearly giving it as. So first investment to P&L, that will be the entry. If you are not, if you don't remember this points, you refer my step up question video which I'm given in my YouTube. Clear? That's it. So clear. Okay. So now you take it as normal. So first we will take all their assets. Now all their liability including contingent liability. Now NCI should be measured at fair value. So that means okay, so it can be calculated as, what is the cost of investment for this 45%? 450 into 16, 7,200. So this 7,200 divided by 45 into NCA is 25, you will get 4,000. Clear? Now the PZ is actually 7,200. Out of that face value is 450 into 10 rupee, and so 450 into 6 rupee will be the premium. Clear? That's it. Okay, now the value of old investment has to be cancelled. The new value is 4,800. After this remeasurement, the value is 4,800. So now there is no difference is coming, no goodwill or no gobi. That's it. I think you're okay. So for that also you use the same net asset calculation of previous case. Ready? Now the third case is more interesting. Here actually the question is turned. Here Yes Limited is acquired. Actually in case A and case B, P Limited was acquiring the shares in Yes Limited, but here Yes Limited is acquiring shares in P Limited. So at this time some of the students may have a doubt. Actually this Yes Limited, if it is a small company, then there is a chance for reverse acquisition, but actually both of their net asset, you just calculate their net asset, both of their net asset is currently equal. You can check it. So in this question you don't overthink like that this is a reverse acquisition or not. Ready? This is not reverse acquisition. Ready? Now you take it as an independent case. Actually here Yes Limited is buying a share in P Limited. Ready? 75% stake on this by issue of shares in the ratio based on the market price, for which no accounting effect has yet been made. So the NCA is measured at fair value. Clear? So that's it. Okay, so here it's a complete consolidation actually, but the problem is Yes is taking shares in P Limited, but remember already there is a cross holding means Yes is buying shares in P Limited, but already P Limited have a shares in this company 30%. അതിന്റെ കോസ്റ്റ് 3,500 ആണ്. ആ ഒരു ഇഷ്യൂ ആണ് ഇവിടെ ഒരു ട്രിക്കി ആയിട്ടുള്ളത്. അപ്പാർട്ട് ഫ്രം ദാറ്റ് ദർ ഇസ് നോ പ്രോബ്ലം. സോ കംപ്ലീറ്റ് കൺസോളിഡേഷൻ ആവുമ്പോൾ എൻട്രി അസറ്റ്സ് അറ്റ് ഫെയർ വാല്യൂ ടു ലയബിലിറ്റി ടു പി സി ഡിഫറൻസ് difference will be goodwill or gobi. So but we have to take the assets and liabilities of P Limited because S is taking. So in the books of S Limited we have to recognize the assets and liabilities of P Limited at fair value, but P Limited fair value is not given here. But so PPE and investment properties fair value or any other items fair value is not given, but a hidden fair value of this item is to be calculated. That means this 3,500 was a 30% share bought by P Limited in S Limited. Hey, currently S Limited investing in P Limited 75%, but previously P Limited purchased in S Limited. So when we buying the shares in P Limited, we have to recognize our own shares. That is called as investment. So we have to take that investment also here. But this should be at its fair value. For that, the current fair value is 15. So S Limited current market price is 15. So clear? So that is a tricky point in this case. So now coming into the answer. First we have to calculate the PZ. How much is the amount we have to give here? So the hint they gave, it is based on the market price. So S Limited is buying 75% of P Limited. So now coming into shares of here. So this is 1,200 shares are there. 1,200 shares into 75 that means around we get 1,200 into 75%, 900 shares. Clear? For that P Limited market price is 16 rupees. So 16 rupees. So we have to give 14,400. That is the PZ we have to give to P Limited for buying 30%. So for that PZ in shares will be calculated. So this is the total PZ. So the shares are giving by S Limited. Their price is 15. So how many shares we have to give? 14,400 divided by 15, 960. So out of that share capital will be this and premium will be this. Clear? Now for calculating the fair value of this investment in S Limited. So remember actually this was a 30% shares. That means 800 into 30%. Ready? So 30% into 15 rupees the current fair value of S Limited. So actually the current investment value will be 800 into 30% into 15, 3,600 will be the fair value of investment owned by P Limited in S Limited. So in short, while we taking P Limited asset, this fair value will be 3,600. Clear? So the entry will be in the books of S Limited. Entry will be PP of P Limited 12, investment property 1,000, investment in own shares. That will be the name, because we taking the shares of our own, because this shares was issued by S Limited to P Limited earlier. Clear? Then current asset 4,500. Clear? It will be given as a balancing figure. Ready? Now remember, borrowing 3,000, trade payable 2,000. Clear? That's it. Now PZ is 14,400. Clear? Okay. NCA will be based on fair value method. So 14,400 is a PZ we give, divided by 75 into 25, we will get this figure. Clear? That's it. So the goodwill you can calculate as a balancing figure. Ready? Are you okay? That's it. And additionally, I'm giving, if you want to calculate the net asset, actually in this question, in this journal entry question, it is actually not required. Goodwill will be get as a balancing figure. Don't worry. Clear? So, but additionally, how the net asset and NCA. Clear? That's it. Oh, ready? So same pattern. I think you're okay. That's it. So in ICMA answer key, there is a small mistakes that what I feel. In case A, case B, there's no problem. Case C, there is a amount they're showing, and this as a slight difference they have. Ready? So actually that is a bit mistake. Ready? Apart from that, there's no problem with my answer key. Clear? That's it. So coming into the next question, that is question related to joint arrangement. That's a theory question. So this is they usually asking. Ready? Joint control. Ready? So this is that part. I'm not, since it's a theory question, you read it. I just give the theory written in ICMA answer key itself. I just cut and copy that. And disclosure requirement of 1112. Ready? So that's a rare part they asking as a theory. Clear? Now we have some question related to economic value added. Ready? Okay, so for calculating economic value added, so the basic equation is actually the net operating profit after tax. Operating profit after tax, that means operating profit means EBIT, after post-tax EBS, post-tax EBIT. Ready? So now net operating profit after tax minus cost of capital employed. Ready? So here for that, the information is a bit tricky. So they don't give equity share capital and preference share capital. That is why the question become more tricky. So we have to apply for some equations. For that, they give some indirect clues. So what they give reserves and they give loan, debenture. Then they give a clue that debt equity ratio, that means long-term debt, that means debenture divided by shareholders fund is 2:1. Based on that, we can, that's a hint to get equity and preference. Ready? And there is another clue, capital gearing ratio. Capital gearing ratio means you maybe heard this ratio in your FM, ready, or SFM. If you not seen SFM, probably you might see in your inter level FM. Allada. So adile funds bearing fixed payment to equity shareholders fund. Either fixed bearing means long term. Fixed bearing means debentures is a fixed interest and preference share is also fixed. So debentures and preference share capital covering here. Two equity shareholders fund, that is 3:1. Then financial leverage. Financial leverage means EBIT divided by EBIT divided by PBT. That is a financial leverage. That is 1.32. So 1.32. Tax rate 25%. Market rate of return is 15.5% and risk premium. So that's it. Okay, clear? Now they give beta. Ready? Because the cost of equity is not given here, so for that they gave beta here. Clear? So actually this question is heavily tested in SF form. Ready? They want to make EVA calculations bit tougher in this CFR attempt. That's why they take a question which should be asked in SF form. Ready? But don't worry, we will manage it. Ready? So first of all, the basic formula to calculate economic value added is this. Ready? Net operating profit after tax. Net operating profit after tax minus cost of capital employed. That means എനിക്ക് ആക്ച്വലി ഉള്ള ഓപ്പറേറ്റിംഗ് പ്രോഫിറ്റ് ആഫ്റ്റർ ടാക്സ് മൈനസ് എൻ്റെ കോസ്റ്റ് ഓഫ് ക്യാപിറ്റൽ എത്രയാണ് എൻ്റെ ക്യാപിറ്റലിന്റെ കോസ്റ്റ്. അപ്പൊ നിങ്ങൾക്ക് കിട്ടുന്ന ആ ഒരു വാല്യൂ പ്രോഫിറ്റ് എഡ്ജ് ഉണ്ടല്ലോ, അതാണ് ഈ എക്കണോമിക് വാല്യൂ ആഡഡ് എന്ന് പറയുന്നത്. അതിന് ഇനി ഫോർമുല നെറ്റ് ഓപ്പറേറ്റിംഗ് പ്രോഫിറ്റ് ഇസ് ഈക്വൽ ടു EBIT ഇൻറ്റു മൈനസ് ടാക്സ്. റെഡി? ക്ലിയർ? So now remember capital employed, cost of capital employed means cost of capital employed into weighted average cost of capital. Ready? That's it. WACC. Clear? Now first we calculate net operating profit after tax. For that we have to calculate EBIT. So EBIT calculation is the first. Ready? For that they gave a clue here. What is that clue? Leverage. Financial leverage is 1.32. So EBIT divided by PBT. So here EBIT divided by PBT is 1.32. Now PBT is actually means profit before tax. Ready? So now earning before interest and tax minus interest is equal to profit before tax. So now profit before interest and tax il ninnum interest korachal profit before tax ആയി. അതുകൊണ്ട് ഞാൻ എന്ത് ചെയ്യും, ഈ PBT യെ ഞാൻ എന്ത് ചെയ്യാണ്, ഇത് വെച്ചിട്ട് സബ്സ്റ്റിറ്റ്യൂട്ട് ചെയ്യാണ്. PBT is substituted by this. Ready? Now the formula is like this. EBIT divided by EBIT minus interest that is equal to 1.32. 1.32. Clear? That's it. Now when mathematically substituting this, ready? Okay, clear? It will be EBIT. So അതായത് EBIT നമ്മൾ ഈ ഡിനോമിനേറ്റർ പാർട്ട് നോമിനേറ്ററിലോട്ട് കൊണ്ടുവരാം, റൈറ്റ് സൈഡിലോട്ട്. റെഡി? അപ്പോ മൾട്ടിപ്ലിക്കേഷൻ ആയിരിക്കും. ദാറ്റ് മീൻസ് EBIT is equal to 1.32 EBIT minus 1.32 interest. Clear? That's it. Okay, so now ISO. Okay, 1.32 interest. Clear? So the interest is we can calculate how much. 800 into 12%. 800 into 12% will be 96, probably. Yeah, 96. So 96. So now when you substitute this, you will get this. EBIT is equal to 1.32 into 1.32 interest means 96 into 1.32 will get 126.72. Now you take that here. So when you take this EBIT into here, there will be a 126.672 is equal to 0.32. That means 1.32 EBIT minus 1 EBIT, that is 0.32. Now things are easy. EBIT is equal to 396. That means 126.72 divided by 0.32. Clear? So that's it. Now if EBIT is this, now 396 into post tax, that means minus 1 minus 0.25, you will get this. So first part is okay. Clear? No PAT is calculated. Clear? Now capital employed we have to calculate, and weighted average cost of capital also calculate. Ready? So now we calculate capital employed calculation. For that, capital employed is equal to equity share capital plus preference share capital plus reserves. Here they only give reserve. They only give reserve. Now we have to calculate equity share capital and preference share capital. For that, we can use two clues. First clue, debt equity ratio. That means debt means long term debt divided by shareholders fund, that is 2:1. So now when you substitute this, ready, long term debt ഈ ഡിനോമിനേറ്റർ പാർട്ട് ഇങ്ങോട്ട് കൊണ്ടുവരുമ്പോൾ 2 into shareholders fund means this. Ready? Now this long term debt means debenture 800. That 800 is equal to 2 into all of this. So when you multiply this, reserves we can substitute 50 rupees. So 2 into 50, you will get 100. Clear? So now 800 is equal to 2 equity share capital plus 2 preference share capital plus 100. So now when you take this 100 here, you will get 100 here. So you will get when you mathematically substitute this, ready, you will get 700 into 700 is equal to 2 ESC plus or we can substitute 2 ESC plus PSC. Ready? Now when you substitute ESC plus PSC is equal to 350. That means 700 divided by 2. You will get ESC plus PSC is equal to 350. So I will take it as equation number 1. Clue number 1. Equation number 1 for calculating equity share capital. Now coming to second clue. Capital gearing ratio. That means fixed funds. Fixed funds means debenture and fixed payment funds divided by equity shareholders fund, that is 3:1. So here long term loan plus preference share capital, that is fixed fund, that is equal to equity shareholders fund means reserves and surplus plus equity share capital, that is this. Clear? Now when you substitute this long term ready, so sorry, this is divided by equity share capital plus reserves, that is equal to 3 divided by 2. Now when you take this denominator part into right side, then 3 into equity share capital plus reserve. Ready? Now when you substitute long term loan as a 800, now 800 plus PSC, that is equal to 3 ESC into 3 reserves is 50. 3 reserves is equal to 150. Now when you substitute this, ready, remember you take 800 minus 150, that is 650. 3 ESC plus coming into this, then when you will take it will be 3 ESC minus PSC. This is my equation number 2. Now equation 1 is equal to ESC plus PSC, that is equal to 350. Ready? That is equation 1. Now equation 2 is equal to equation 2 is 3 ESC minus PSC, that is equal to 650. Now when you add 1 plus 2, what happens? 4 ESC plus PSC plus minus PSC, it will be 0 PSC. So ready? That means 650 plus 350, that is 1000. Now things are easy. ESC is equal to 1000 divided by 4, 250. So if 250 is the ESC, then when you substitute in equation 1, 250 plus PSC is equal to 350, then you will get it. Clear? That's it. So it will be 100. Clear? It will be 100. Okay. Okay, in equation 1. So in short, to get capital employed, you got equity, share capital and preference. Now we get everything. Ready? Okay, that's it. So now here capital invested, that means capital invested or capital employed is in this economic value added chapter capital employed is equal to equity share capital plus preference share capital plus reserve plus long-term debt. Ready? So this is not share valuation. This is economic value added. So in this definition, capital employed is like this. Actually, in our share valuation, long-term debt is not including in capital employed. But in economic value added, this long-term debt is inclusive. Ready? So 250 is ESC, PSC is 100, reserves is 50, debenture is 800, total 1200. So here two figures we got. NOPAT we get and capital employed. Now we have to calculate weighted average cost of capital. That is simple. Ready? That is cost of debenture plus cost of preference shares. That is directly we know. Cost of debenture we know 12%, cost of preference shares 12%. Clear? Now, but equity shares cost is not given. That is cost of equity. So this cost of equity is but remember here cost of debenture is pre-tax. To convert into post of tax, cost of debenture post tax will be 9%. Cost of preference shares will be 15. Now cost of equity can be calculated by using this formula. Ready? That's it. Risk free return plus market premium into beta. You remember this formula from your in your FM chapter maybe. Ready? Clear? So that is 6.5 plus 9 that is a market premium. Clear? Ready? Okay. So risk premium is 9%, risk free return is 6.5%. That is here in this case this difference is a 6.5. Ready? 6.5 plus 9 into beta. Here while you taking beta, so this beta 1.5 actually calculating as an average beta. So here average beta means this 5 years total divided by 5, then you will get a 1.5. But alternatively students can also take highest beta. So in different perspective they can take highest beta. Ready? So here we take the average beta. Ready? Average beta. Clear? Okay, now then you will get cost of equity as a 20%. Now for calculating weighted average cost of capital, cost of debentures, cost of preference shares, cost of equity divided by total 1200. That is a total amount of capital invested. Ready? Then you will get weighted average cost of capital 12.25. Now how much was the non-operating profit after tax? How much it was? Ready? It was 297. So 297 minus capital invested is this into weighted average cost, then you will get 150. But remember in ISME answer key they get I think a different answer. I don't know how they got it. They don't give a detailed answer also. Ready? So I tried my level best, but maybe they give any mistakes, or maybe they have different perspectives. So, but don't worry. This should be the actual correct valuation. This is what I feel. Clear? So this is what I said in my first disclaimer. Some mistakes they got. Clear? That's it. Ready? Now the next question, we slightly moving on into some theory. There's a usual theory question we seeing in government accounting, public accounts committee, the constitution and objectives, and short note on consolidated fund. Maybe you know it already. Clear? Now question 8. Question 8, coming into question 8a. Ready? So this is a lease question. This we done too many times. Clear? Okay, so a lease term 5 years, fair value machine, annual lease rent, GRV, expected residual value, or IRR, past January in the books of lessee and lessor for the first year. For that, first you have to calculate present value of lease payment. Ready? So this will be the present value of lease payment, 5 lakh and GRV this. Ready? So present value of lease payment will be this. Ready? So now to write in the books of lessor, you need net investment. So net investment is actually present value of lease payment plus present value of UGRV. So total RV is 2 lakh. Out of that, GRV is 1, UGRV is 1. Clear? So then you will get the net investment like this. So now in this answer key, they give a AS based journal entry, but when you write, you have to convert into Indes based. That means the difference is in the books of lessee, asset name we will never mention. Instead we use ROU account. Instead of lessor name we use lease liability. That's it. Apart from that, there's no issue. Clear? So then you have to calculate first year interest. For that, into 15%. Now this will be the initial entry. Clear? Now year end entry, interest account debit to lease liability or lessor. Ready? To lease liability to bank. Ready? When installment. So this is interest entry, this is installment entry. Okay, so in their answer key, instead of lease liability they put a lesser name. Ready? But in Indes we usually write lease liability. Ready? So now when you make an answer, you write this like lease liability. That will be better. But maybe as I said, our ASL in Indes lot shift in the year either some years is actually as in the material in the our copy. This is, I know this question. Clear? But our answer key I change technical name change nadathan vittu poi. That's not fair. Ready? From my personal thought. Now depreciation you will calculate. This rate of depreciation is given. If they give the rate, you go with that. Clear? That's a 10% depreciation to ROU. That should be the index. Then P&L to depreciation to finance charge. Now coming into lesser book, that's it. Instead of lease receivable in index, we use investment in lease to machinery. Ready? That's it. Then that will be the initial entry. Now year end entry. First interest and then installment, net രണ്ടിന്റെ കൂടെ net entry ആണ് ഇത്, then finance income. So that's it. Since it's a question we already done, we're not detailing it. Clear? Now we have Atma Tulsi Limited, which is developing a new production process. Ready? So this question is also we done from the exam. Clear? Sorry, from the classroom. Hey, എന്താ റംഷാദ് ഇത്? Total expenditure incurred 2021 total expenditure incurred 100 lakh, out of which 44 lakh incurred before 1st December when the production process met the criteria. So actually out of 100 ഡെവലപ്മെന്റ് ക്രൈറ്റീരിയ മീറ്റ് ചെയ്തതിനു ശേഷം സ്പെൻഡ് ചെയ്യുന്നത് എത്രയായിരിക്കും? അപ്പോ 56 ആയിരിക്കും. ഇത് ക്യാപിറ്റലൈസ് ചെയ്യണം. ആൻഡ് 44 എന്ത് ചെയ്യണം? പി ആൻഡ് ഇൻ 2021. In 21-22 development phase began in 1st April 21. ഈ വർഷത്തിൽ വീണ്ടും വർക്ക് എന്ത് ചെയ്തു? 1st April 21 തന്നെ തുടർന്നു എന്നാണ്. ഓൾട്ടർനേറ്റീവ്ലി വേണമെന്നുണ്ടെങ്കിൽ ഇത് 2020 തന്നെ ഈ ആക്ച്വലി ഡെവലപ്മെന്റ് പ്രോസസ്സ് 2020 തന്നെ തുടങ്ങിയിട്ടുണ്ടല്ലോ, ആക്ച്വലി ഈ ഇയറിൽ തന്നെ തുടങ്ങിയിട്ടുണ്ടല്ലോ. ബട്ട് മേ ബി അവർ 21 തരാൻ കാരണം ഈ ഒരു പെർട്ടിക്കുലർ ഇയറിൽ 21 തുടങ്ങിയെന്നാണ്. അല്ലെങ്കിൽ അതൊരു സെൻസ്ലെസ് ആണ്. എന്നാ തുടങ്ങിയത്? 2020 ആണ്. പക്ഷെ അങ്ങനെ മീനി വെക്കുമ്പോഴേ അതിനൊരു സെൻസ് ഉള്ളൂ. ആൻഡ് കംപ്ലീറ്റഡ് ആഫ്റ്റർ ഇൻക്വയറിംഗ് 400 ലാക്ക്. അതായത് അടുത്ത വർഷം എത്ര സ്പെൻഡ് ആയി? അഡീഷണൽ 400. അതായത് 31 മാർച്ച് 22 ആവുമ്പോഴേക്ക് ഇൻടാഞ്ചിബിൾ അസറ്റ്സിന്റെ എമൗണ്ട് 56 പ്ലസ് 400 ആയി. ക്ലിയർ? അതായത് 456 ആണ് ടോട്ടൽ ഇൻടാഞ്ചിബിൾ അസറ്റ്. നൗ from 1st April 22, അതായത് ബിഗിനിങ് ഇയറിൽ the company implemented a new process which will result in after tax cost saving of 100 lakh per annum for the next 5 years. For the next 5 years, the company cost of capital is 10% present value factor. So here you have to calculate the recoverable amount, which is 100 into 3.79, that is 379. Now let's see the question. First, what is expenditure to be recognized as an expense in the 31st March 2021 year? Ready? That is 44 lakh. Ready? Very easy, clear. 44 lakh. But before writing the answer, you have to give the provision as per Ind AS 38. All development cost incurred before meeting the criteria will be taken to P&L. After criteria will be capitalized. You have to write it. Clear? That's it. So this 44 has to be taken to P&L, and 56 has to be taken to on 31st March 21 carrying amount will be 56, and on 31st March 22 carrying amount will be 456. That is a correct answer. Ready? And what is the cost of internally generated asset? Ready? That is also 456. Now what is expenditure to be recognized as an expense in the statement of P&L for the 2022? Actually in 2022 there is no depreciation, sorry, amortization, because the asset is ready only on 31st March 22. So the amortization will be charged from 22-23 onwards. Clear? Okay, so there's no zero is the amount, nil is the correct answer. And what is the amortization of intangible asset for the 31st March 20? So 456 divided by how much is the life? Life is 5 years. Ready? 456 divided by probably but remember there is an issue. Actually in this question probably they will take on 1st April 22 this recoverable amount is given. So in the year beginning, on 1/4/22 the carrying amount is 456, recoverable amount is 379. So the impairment loss is 456 minus 379. 77 should be the impairment loss. After that the revised carrying amount will be 379. Divide by 5, you will get how much is the amortization will be 75.9. Clear? You can refer the answer key. 75.9 will be the amortization. Clear? Now what is the carrying amount as on 31st March 23? So after that amortization 379 minus 75.9, you will get 303.2. So that will be the ultimate answer. Ready? That's it. So it's an easy question. Last part. Ready? Now we have a question related to borrowing cost in this 23. In this 23. Clear? So here G Limited began a construction of new building on 1st April 22. It obtained a special loan 2 lakh specific loan under on 1st April the interest rate on 1st April at an interest rate of 10%. So there is a specific loan of specific loan under 10% on interest rate. Alle makkale. Now the other general borrowing on this date a fund rate തരുന്നുണ്ട്. Clear? Okay. Now expenditure spend ചെയ്യുന്നതുണ്ട്. Clear? Now construction actually completed on 31st 12. So 22 to 31st 12/22 വരെ നമുക്ക് 9 month ആണുള്ളത്. സോ അവിടെ ആക്ച്വലി ഒരു കൺഫ്യൂഷൻ നിലനിൽക്കുന്നുണ്ട്. ക്ലാരിറ്റി ഇല്ല എങ്കിൽ 9 month ക്വാളിഫയിങ് അസറ്റ് എടുക്കണോ നോൺ ക്വാളിഫയിങ് അസറ്റ് എടുക്കണോ? നോർമലി 12 month എടുക്കുന്ന ഐറ്റം ആണ്. പക്ഷേ ഈ ഒരു കമ്പനി 9 month എടുക്കുകയാണെങ്കിലും സ്റ്റിൽ അത് ക്വാളിഫയിങ് അസറ്റ് ആയിട്ടാണ് നമ്മൾ എടുക്കാനൊക്കെ പറയാറ്. റെഡി? അപ്പോ സ്വാഭാവികമായിട്ടും ക്ലാരിറ്റി ഇല്ല എങ്കിൽ ഇവിടെ അങ്ങനെ നോർമലി എത്രയാണ് ഇവരെത്രയാണ് എന്നൊന്നുമില്ല, ക്ലാരിറ്റി ഇല്ല. ഇവർ 9 month എന്നാണ്. 9 month. അപ്പോ ഈ ഒരു കേസിൽ പൊതുവെ ഇത്തരം ബിൽഡിംഗ് എടുക്കാൻ 12 month എടുക്കുന്ന ടൈപ്പ് ഓഫ് അസറ്റ് ആണ് എങ്കിൽ, പക്ഷെ ഇവര് 9 month ആണ് എടുക്കുന്നതെങ്കിൽ ക്വാളിഫയിങ് അസറ്റ് ആയിട്ട് എടുക്കാം. അല്ല, ആക്ച്വലി ഇത് 9 month പൊതുവെ എടുക്കാറുള്ളൂ എങ്കിൽ ഇത് നോൺ ക്വാളിഫയിങ് അസറ്റ് ആയിട്ടാണ് എടുക്കുക. പക്ഷെ ക്ലാരിറ്റി ഒന്നും ഇല്ല എങ്കിൽ ഞാൻ പൊതുവെ പറയാറ്, പൊതുവെ മെറ്റീരിയലുകളിൽ ക്വാളിഫയിങ് അസറ്റ് ആയിട്ട് പോകാനാണ് പറയാറ്. അത് രീതിയിൽ തന്നെ പോകുന്നതാണ് ബെറ്റർ. പക്ഷെ ICMAയുടെ ആൻസർ കീയില് ഇത് സ്ട്രൈറ്റ്ലി നോൺ ക്വാളിഫയിങ് അസറ്റ് ആയിട്ടാണ് എടുത്ത് കാണുന്നത്. പക്ഷേ അതൊരിക്കലും എനിക്ക് നിങ്ങൾക്ക് ഈ കമ്മിങ് ക്വസ്റ്റനിൽ പറഞ്ഞുതരാൻ പറ്റുന്ന ഒരു ആൻസർ അല്ല. റെഡി? ബിക്കോസ് നമ്മുടെ മെറ്റീരിയലിലും സ്റ്റഡി മെറ്റീരിയലും ഒക്കെ നിങ്ങൾ കണ്ടിട്ടുണ്ടാവും, CA ഫൈനലിലൊക്കെ ക്വസ്റ്റ്യൻസ് കണ്ടിട്ടുണ്ടാവും. അതിൽ ഇത്തരം കേസിലൊക്കെ അത് ക്വാളിഫയിങ് അസറ്റ് ആയിട്ട് തന്നെ എടുക്കാറുണ്ട്. റെഡി? പക്ഷെ ഇവരിത് സ്ട്രൈറ്റ്ലി നോൺ ക്വാളിഫയിങ് അസറ്റ് ആയിട്ടാണ് എടുത്തത്. അപ്പൊ അതുകൊണ്ട് തന്നെ ഞാൻ കുട്ടികളോട് പറയുന്ന ആൻസർ വേ എന്ന് പറയുന്നത്, ഇങ്ങനെ ഒരു സിറ്റുവേഷൻ നിങ്ങൾക്ക് ഉണ്ടെങ്കിൽ ആക്ച്വലി ഞാൻ കൃത്യമായിട്ട് ഇവിടെ പറയുന്നുണ്ട്. എ ലോൺ യൂസ്ഡ് ഫോർ കൺസ്ട്രക്ഷൻ ഓഫ് എ ബിൽഡിംഗ്. Here construction period is 9 months, which is assumed as a substantial period, hence we treat it as a qualifying asset. എന്നിട്ട് അത് ആസ് യൂഷ്വൽ ആൻസർ ചെയ്യുക. എന്നിട്ട് വേണമെങ്കിൽ ഒരു ഓൾട്ടർനേറ്റീവ് റൈറ്റിംഗ്, since construction period is less than 2 months, we assume it is not a substantial period, hence it is not a qualifying asset. അങ്ങനെയാണെങ്കിൽ എൻ്റെ ഇൻട്രസ്റ്റും P&L റെഡി? അങ്ങനെ ഒരു സ്റ്റേറ്റ്മെന്റ് കൂടെ നിങ്ങൾ ആൻസറിൽ കൊടുക്കുന്നത് നല്ലതായിരിക്കും ICMAയുടെ ആൻസർ പാറ്റേൺ വെച്ചിട്ട്. റെഡി? സോ അതായത് ലെസ് ദാൻ 12 month ആണ് എന്നുണ്ടെങ്കിൽ നോർമലി നമ്മൾ ക്വാളിഫയിങ് അസറ്റ് ആയിട്ട് തന്നെ എടുത്തു പോവാ. എന്നിട്ട് നോട്ടായിട്ട് വേണമെങ്കിൽ ഇത് നോൺ ക്വാളിഫയിങ് അസറ്റ് ആയിട്ടും എടുക്കാം എന്ന് പറഞ്ഞിട്ടുള്ള ഒരു സ്റ്റേറ്റ്മെന്റ്, ഒരു ഡിസ്ക്ലൈമർ പോലെ കൊടുക്കുന്നത് ബെറ്റർ ആയിരിക്കും. റെഡി? ആക്ച്വലി ഇവര് എന്തുകൊണ്ടാണ് ഈ ഒരു ക്വസ്റ്റനിൽ ഇത് 9 month നോൺ ക്വാളിഫയിങ് അസറ്റ് ആയിട്ട് എടുത്തത് എന്നുള്ളതിനൊരു സെൻസ് ഒന്നും ഇല്ല. റെഡി? പക്ഷേ ഇത് ആക്ച്വലി 4 മാർക്കിനായതുകൊണ്ട് ഇത് ക്വാളിഫയിങ് അസറ്റ് ആയിട്ട് എടുക്കുമ്പോൾ ഒരുപാട് എഫേർട്ട് നമ്മൾ എടുക്കാനുണ്ട്. നോൺ ക്വാളിഫയിങ് അസറ്റ് ആണെങ്കിൽ സ്ട്രൈറ്റ്ലി ഇൻട്രസ്റ്റ് എന്ത് ചെയ്താൽ മതി, P&L എടുത്താൽ മതി. പക്ഷെ അതെനിക്കൊരു ജനറലൈസ് ചെയ്തിട്ട് പറയാനൊന്നും പറ്റില്ലല്ലോ. സോ വാട്ട് യു ഹാവ് ടു ഡു ഈസ് ആക്ച്വലി ഐ എം റിട്ടൺ ഇൻ മൈ ആൻസർ. സോ ഫസ്റ്റ് ഐ ടേക്ക് ഇറ്റ് ആസ് എ ക്വാളിഫയിങ് അസറ്റ് ആൻഡ് സോൾവ് ഇറ്റ്. ഫോർ ദാറ്റ് വെയ്റ്റഡ് ആവറേജ് ബോറോയിങ് കോസ്റ്റ് നിങ്ങൾ കാൽക്കുലേറ്റ് ചെയ്യണം. അത് ആസ് യൂഷ്വൽ നിങ്ങൾ ഈ പറഞ്ഞിരുന്ന പോലെ അതിന് വേണ്ടി വേണ്ടിയിട്ട് എന്ത് കാണണം? വെയ്റ്റഡ് ലോൺ കാണണം, ആക്ച്വൽ ഇൻട്രസ്റ്റ് കാണണം. എന്നിട്ട് ഈ ആക്ച്വൽ ഇൻട്രസ്റ്റ് ഡിവൈഡ് ബൈ വെയ്റ്റഡ് ലോൺ, then you will get 14%. Ready? Now interest to be capitalized ആദ്യം എക്സ്പെൻസസ് സ്പെൻഡ് ചെയ്യുന്നതിൽ സ്പെസിഫിക് ലോൺ വെച്ചിട്ടാണ്, ബാക്കിയെല്ലാം ജനറൽ വെച്ചിട്ടാണ്. സോ മൊത്തം 1,06,000 ആണ് ടോട്ടൽ ഇൻട്രസ്റ്റ് നമുക്ക് എന്ത് ചെയ്യാൻ പറ്റുന്നത്? ക്യാപിറ്റലൈസ് ചെയ്യാൻ പറ്റുന്നത്. നൗ ഇനി അത് കഴിഞ്ഞിട്ട് ഇൻഫർമേഷൻ ഉണ്ട്. ഹൗവർ ഇറ്റ് വാസ് പുട്ട് ടു യൂസ് നമ്മളെ സംബന്ധിച്ചിടത്തോളം റെഡി ടു യൂസ് ആവുന്നത് വരെയാണ് ബോറോയിങ് കോസ്റ്റ് ക്യാപിറ്റലൈസ് ചെയ്യുക. നൗ സം ഓഫ് 20 lakh ഹാസ് ബീൻ അഡ്വാൻസ്ഡ് ഫോർ പർച്ചേസ് ഓഫ് എ പ്ലാന്റ് ആൻഡ് മെഷീനറി which was installed on this day. ഒരു അസറ്റ് മെഷീനറി വാങ്ങുകയാണെങ്കിൽ ദാറ്റ് ഇസ് നോട്ട് എ ക്വാളിഫയിങ് അസറ്റ്. അതുപോലെ തന്നെ 29 lakh ഹാസ് ബീൻ യൂസ്ഡ് ഫോർ വർക്കിംഗ് ക്യാപിറ്റൽ, ദാറ്റ് ഇസ് ഓൾസോ നോൺ ക്വാളിഫയിങ് അസറ്റ്. അതിന്റെ മുകളിലെ ഇൻട്രസ്റ്റ് നോ ഡൗട്ട് പി ആൻഡ് എൽ. സോ ആക്ച്വലി ഇവിടെ ചോദ്യം ഷോ ദ ട്രീറ്റ്മെന്റ് ഓഫ് ഇൻട്രസ്റ്റ് ആസ് പെർ ദ in this 23 and pass the journal entry. Clear? ഓക്കെ. അപ്പോ ഇവിടെ ടോട്ടൽ ഇൻട്രസ്റ്റിൽ എത്രയാണ് പി ആൻഡ് എല്ലോട്ട് പോകുന്നത്, എത്രയാണ് ക്യാപിറ്റലൈസ് ചെയ്യേണ്ടത്? ക്യാപിറ്റലൈസ് ചെയ്യേണ്ടത് 1,06,000 ആണ്. അതിൽ ടോട്ടൽ ഇൻട്രസ്റ്റ് എത്രയാണെന്ന് അറിയണമെങ്കിൽ ടോട്ടൽ എത്രയാണ് ഇവിടെ ലോൺ എടുത്തതെന്ന് അറിയണം. അത് ടോട്ടൽ ലോൺ ഉള്ളത് ഇതാണ്. റെഡി? അപ്പൊ ഈ ലോണിന്റെ മുകളിലുള്ള ആക്ച്വൽ ഇൻട്രസ്റ്റ് ഓൾറെഡി നമ്മൾ വെയ്റ്റഡ് ആവറേജ് ബോറോയിങ് റേറ്റ് കാൽക്കുലേറ്റ് ചെയ്യാൻ വേണ്ടിയിട്ടല്ലേ ഈ കേസ് എടുത്തപ്പോൾ കണ്ടതാണ് 7 lakh. റെഡി? ആ 7 lakh ഓൾറെഡി ജനറൽ ലോണിന്റെ മുകളിലുണ്ട്, പ്ലസ് സ്പെസിഫിക് ലോണിന്റെ മുകളിൽ 20,000. ആകെ മൊത്തം 7,40,000 ആണ്. അതിൽ ക്യാപിറ്റലൈസ് ചെയ്യുന്നത് 1,06,000 ആണെങ്കിൽ പി ആൻഡ് ലോട്ട് 6,40,000. ഇങ്ങനെയാണ് നോർമലി നിങ്ങൾ ക്വസ്റ്റ്യനിൽ ആൻസർ ചെയ്യേണ്ടത്. പക്ഷേ സിമി ആൻസർ ഇത് നോൺ ക്വാളിഫയിങ് അസറ്റ് ആയിട്ടാണ് എടുക്കുകയാണെങ്കിൽ എൻ്റെ 7,20,000 പി ആൻഡ് എൽ ലോട്ടാണ്. അപ്പൊ പിന്നെ എൻട്രി പി ആൻഡ് എൽ അക്കൗണ്ട് ഡെബിറ്റ് ടു ഇൻട്രസ്റ്റ് പേയബിൾ ഓർ ഇഫ് ഇറ്റ് ഈസ് പെയ്ഡ് ക്യാഷ്. റെഡി? ബട്ട് അതുകൊണ്ടാണ് ഞാൻ ഇതുപോലെ ഒരു ഓൾട്ടർനേറ്റീവ് ആൻസറിന്റെ പ്രിസ്ക്രിപ്ഷൻ തന്നത്. ക്ലിയർ? ദാറ്റ്സ് ഇറ്റ്. നൗ അപ്പാർട്ട് ഫ്രം ദാറ്റ് വി ഡൺ ദ എൻറ്റയർ ക്വസ്റ്റ്യൻസ് ഓഫ് June 23. Ready? Katam. June 23 is Katam. Ready? So now നിങ്ങൾ ഈ ആൻസർ കീ നിങ്ങൾ ആൻസേഴ്സ് എല്ലാം സോൾവ് ചെയ്താണ്. നിങ്ങൾക്ക് തന്നെ അറിയാം, യൂട്യൂബിലൊക്കെ മറ്റ് June 23 സോൾവ് ചെയ്യുന്നത് നിങ്ങൾ കണ്ടിട്ടുണ്ടാവില്ല. അത് കാരണം ആക്ച്വലി ലോട്ട് ഓഫ് അൺസർട്ടനിറ്റീസ് ഉണ്ട്. പക്ഷേ ഐ ടുക്ക് ദാറ്റ് ചാലഞ്ച്. റെഡി? ആൻഡ് ഐ റിവീൽഡ് ഓൾ ദിസ് അൺസർട്ടനിറ്റീസ് ആൻഡ് ക്ലാരിറ്റീസ്. റെഡി? സോ ഫ്രം മൈ പാർട്ട് I done my maximum. Ready? Because I give that all the answer. Ready? Yeah. Now in എക്സാമിന് പഠിക്കുമ്പോൾ നിങ്ങൾ ഇതിൽ ചെയ്ത് നിങ്ങൾ 1-2 ക്വസ്റ്റ്യൻ നിങ്ങൾ എക്സാം ഈ പുതിയ അറ്റംപ്റ്റില് നിങ്ങൾ ചെയ്യണ്ടെന്ന് പറയും. ഒന്ന് ഞാൻ തുടക്കത്തിൽ ചെയ്ത ആ AS ടച്ചുള്ള ക്വസ്റ്റ്യൻ ഇല്ലേ മക്കളെ? റെഡി? അത് ആക്ച്വലി അത് ഒരു ഇൻഡേസ് ലെവലിൽ അവർ ചോദിക്കാൻ പാടില്ലായിരുന്നു. റെഡി? അത് റിപ്പീറ്റ് ചെയ്യാൻ ചാൻസ് ഇല്ല എന്നുള്ളതാണ്. റെഡി? അത് നിങ്ങൾ നോക്കണമെന്നില്ല. പക്ഷെ ഇതൊരു നോളജ് ലെവൽ ക്വസ്റ്റ്യൻ ആണ്. ബാക്കിയൊക്കെ നല്ല ഉഷാറ് ക്വസ്റ്റ്യൻ ഉണ്ട്. ഇത് നല്ല അടിപൊളി ക്വസ്റ്റ്യൻ ആണ്. റെഡി? ഇത് പിന്നെ നമ്മൾ ചെയ്യുന്ന ക്വസ്റ്റ്യൻ തന്നെയാണ്. പിന്നെ ഇത് നമ്മൾ ചെയ്ത ക്വസ്റ്റ്യൻസ് ആണ്. പിന്നെ ഇത് നമ്മുടെ ഇക്വിറ്റി മെത്തേഡ് ചെയ്ത ക്വസ്റ്റ്യൻ ആണ്. ഇതൊക്കെ നമ്മൾ ക്ലാസ് റൂമിൽ നിന്ന് ചെയ്യുന്ന ക്വസ്റ്റ്യൻ ആണ്. പക്ഷെ തെറ്റിക്കാനുള്ള പല പോയിന്റ്സ് ഇതിലുണ്ട്. പിന്നെ ഫൈനാൻഷ്യൽ ഇൻസ്ട്രുമെന്റ് അതും കുറച്ച് ട്രിക്കി ആണ്. ദാറ്റ്സ് ഓക്കെ. പിന്നെ ഇതാണ് ഇതിലെ ട്രിക്കി, എസ്പെഷ്യലി ഇതിലെ സി പാർട്ടാണ് ട്രിക്കി. ബട്ട് എയും ബിയും കുഴപ്പമൊന്നുമില്ല. ദെൻ ഈ ഇവ കാൽക്കുലേഷനും കുറച്ച് ട്രിക്കി ആണ്. ദാറ്റ്സ് ഇറ്റ്. പിന്നെ ഇതൊരു കുഴപ്പങ്ങളൊന്നും ഇല്ലാത്ത ക്വസ്റ്റ്യൻ ആണ്. ബാക്കിയൊന്നും കുഴപ്പങ്ങളില്ല. ദാറ്റ്സ് ഇറ്റ്. സോ ദാറ്റ്സ് ഓൾ അബൌട്ട് June 23 പാർട്ട്. റെഡി? നൗ നിങ്ങൾ ഈ സെക്ഷനുമായിട്ട് ബന്ധപ്പെട്ട നിങ്ങളുടെ കമന്റ് ഫീഡ്ബാക്ക് ആയിട്ട് നിങ്ങൾ കമന്റ് ബോക്സിൽ എഴുതണം. ഇത് എൻ്റെ പാർട്ട് 1 ആണ്. സോ ഇൻഷാല്ലാ ഹോപ്പ്ഫുള്ളി വി വിൽ ഡു പാർട്ട് 2 സൂൺ. റെഡി? നൗ പാർട്ട് 1ന്റെ കാര്യങ്ങൾ കൃത്യമായിട്ട് നിങ്ങൾ യുവർ സജഷൻസ് ആൻഡ് ഫീഡ്ബാക്സ് നിങ്ങൾ കമന്റ് ബോക്സിൽ എഴുതാൻ മറക്കരുത്. ദാറ്റ് വിൽ ബി an inspiration and motivation to do better things. Ready? ലൈക്ക് ചെയ്യാൻ മറക്കരുത്. സബ്സ്ക്രൈബ്. ഇതൊക്കെ ഒരു ക്ലീശ ആയിട്ട് ഞാൻ പൊതുവേ യൂട്യൂബിൽ വീഡിയോ ഇടുമ്പോൾ ഇതൊന്നും പൊതുവേ പറയാൻ ആഗ്രഹിക്കുന്ന ആളല്ല. പക്ഷെ നിങ്ങൾക്കറിയാം, നിങ്ങളുടെ ഫ്രണ്ട്സിലോട്ട് മാക്സിമം ഈ വീഡിയോ ഷെയർ ചെയ്ത് കൊടുക്കുക. കാരണം ഒരുപാട് കുട്ടികൾ ഈ ഒരു ജൂൺ 23 ക്വസ്റ്റ്യനുമായിട്ട് സ്ട്രഗിൾ ചെയ്യുന്നുണ്ട്. അത് ഇടയ്ക്ക് വാട്സപ്പിലെ ക്വസ്റ്റ്യൻ ഒക്കെ ഇങ്ങനെ ഡൗട്ടൊക്കെ ആയിട്ട് വരുമ്പോൾ നമുക്ക് മനസ്സിലാറുണ്ട്. അപ്പം നിങ്ങൾ എസ്പെഷ്യലി ഈ വീഡിയോയുടെ ലിങ്ക് നിങ്ങളുടെ ഫ്രണ്ട്സിന് നിങ്ങളുടെ ഗ്രൂപ്പുകളിലോട്ട് ഷെയർ ചെയ്യണം. അത് എൻ്റെ വീഡിയോ പ്രൊമോട്ട് ചെയ്യാനല്ല, ആക്ച്വലി ഈ വീഡിയോ എനിക്ക് ഉറപ്പാണ് ജെനുവൻലി നമ്മുടെ ഒരുപാട് കുട്ടികളെ ഹെൽപ്പ് ചെയ്യും. റെഡി? സോ നിങ്ങൾക്ക് എത്രത്തോളം യൂസ്ഫുൾ ആയി എന്നുള്ളത് കമൻറ്റ് ചെയ്യാൻ വിട്ടുപോകില്ലേ. യു ജസ്റ്റ് കമൻറ്റ്. റെഡി? സോ ദാറ്റ്സ് ഇറ്റ്. പാർട്ട് 2 ആയിട്ട് നമുക്കൊരു മറ്റൊരു വീഡിയോയിൽ കാണാം. അതുവരേക്കും സൈനിങ് ഓഫ്. ബൈ.